Our next guest says there's two beaten down tech names that may still be worth a buy, two that are looking like a no touch. Let's go off the charts with Todd Gordon of tradinganalysis.com over at the Plasma. Todd, what are you looking at?
Hey, Melissa, first, before we get into the individual names, let's talk about the NASDAQ. Obviously, massive selling. And Melissa, if you remember 2 days ago, you and I were on Power Lunch. We looked at this exact same chart, and we're looking at a 7,000 level. Let's go back to that NASDAQ. I don't want to get away from the index because the index is everything here. So I want to first identify kind of the pullback zone of where we need to hold support. There's that NASDAQ. So we saw consolidation here, right? There's only two ways that markets trade. They either trade in consolidation or they trend trade. There's no other way to do it. The trend began right here. And what you want to do is pull out some of your retracement tools. In any healthy trend, you do expect a pullback. It's anywhere from one third to 3/4. And those levels right here range from 71.86 to 6680. This is the NASDAQ 100. These levels have to hold. This is your pullback zone right here. If you hold, this is a healthy correction. Unfortunately, not to get evil on you here, but if you break 6660 on the NASDAQ, that's big trouble, and that is going to equate to more selling. So while we're contained in here, fine, we can look to scoop some names. So first one up, I think you guys just mentioned it was Apple. I feel like right up until the close, people forgot to tell Apple that we're in the middle of a tech sell-off. Just really good relative strength. I think we closed right around 215 here. There's a lot of support here. If the market were to somehow recover, that seems to be a buying opportunity in Apple. Just a really, really nice, clear, low volatility trade. I'm looking to scoop some if we hold that support level that I mentioned in the NDX. That's the strongest name that we have. Next is Facebook. Karen just mentioned it. Again, a really quiet tape and a very pronounced tech sell-off. We have support. It actually held right at 150. Guy just said it as well. There's a huge tech sell-off happening, but the selling has already occurred. And we seem to be forming kind of a consolidation, decreasing volatility, just a disinterested selling party while above 150. If you take a look at the RSI, this is one of these technical indicators, relative strength index. It just indicates how much momentum there is behind a trend. All trends aren't the same. You could have trends with increasing momentum, greater rate of change, or decreasing rate of change. This indicator put in its low back here in that initial earnings move. We've seen higher lows in the RSI, which indicates decreased selling momentum. You can have lower prices, but at a decreasing rate of change. If you hold 150, Facebook could be a nice scoop. Karen, add some technicals into it, and I know you can do it. You don't be afraid of it. I like the idea. Getting weaker here is Netflix. Unfortunately, I think Netflix just looks terrible. We have a Head and Shoulders top here. This is just not looking good. The neckline is going to be right along these lows here. If you break this Netflix, unfortunately, I think you got to kind of change the channel on Netflix. This is not a healthy pattern and not a name I'd be looking to scoop. Finally, let's take a look at Alibaba. Even before the last 2 days of technology selling, Asia and China has been very weak. You take a look at the FXI, just couldn't get a bounce. Couldn't get a bounce at all. Alibaba, that kind of head and shoulders pattern I just mentioned, has already played out. The breakdown was right around here. We came back to retest, resistance held, which should have been support. That name, you can't sell it now, but you certainly don't want to buy it. I think those Chinese names, Asian equities, are a big reason we're seeing so much pronounced technology sell-off.
Todd, thank you. Todd Gordon of tradinganalysis.com. Grasso, I know you've been a fan of Alibaba in the past. We have Alibaba down, but I mean, Tencent, seems to get worse every single day.
It does, and plenty of people that have bought Alibaba, I'm still have a nice sizable profit in it, but it doesn't matter when you have paper profits and you start to look at them, you assume they were yours to lock in, but you never sold it. So to me, even though I have a profit in it, I still think that when these tariffs start to resolve themselves, Alibaba's at a reasonable valuation. It's going to be a screaming buy as well.
How worried should we be about Netflix? Because not only is it that long duration growth stock, but it also has a levered balance sheet. I mean, it's susceptible to rising rates.
A very levered balance sheet. And, valuation, there is no valuation, right? So that's the one thing we know about this is, okay, its growth is going to be in Asia. So if you're talking about a slowing Chinese economy and a levered balance sheet with very little assets, asset-light business, then this one actually does look quite vulnerable. It still has that support there. To me, it looks like the same type of support that Apple has, so I wouldn't be super aggressive about selling it. But if it does break, I would agree with Todd that this thing looks bad.